If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast. In today's episode, we'll be talking about the recent roller coaster ride of the Chinese electric vehicle maker NIO. It's going to be a pretty good episode, but before we get into it, make sure you hit the like button, make sure you hit the subscribe button, make sure you click the notification bell icon, and leave a comment down below. Your engagement really does help out this podcast where we talk about business and technology. So, without further ado, let's get right into the video. To set the stage, let's rewind a bit. Over the past week, NIO had two significant events that seemed to send conflicting messages to investors and industry watchers alike. On September 19th, NIO's stock at one point took a nosedive by 17%. This sudden drop sparked speculations about the company's financial health, obviously negative. However, just 2 days later, on September 21st, NIO held an innovation conference called NIO Technology Day. This event marked a pivotal moment for the automaker as they unveiled their full stack technology layout to the world for the very first time. In addition to showing their technological prowess, NIO also shocked the world and surprised everyone by unveiling their very first mobile phone. So the question that naturally arises is, why is NIO continuing to make heavy investments into a situation where they're grappling with significant losses and very tight cash flow? To better understand this, let's break down the two situations that seem to have brought NIO's stock price into a plummet. First, there's the issue of high interest convertible bonds. NIO recently announced the issuance of two convertible bonds, which will be raising a total of $1 billion. These bonds carry a relatively high coupon rate, being 3.9% and 4.6%. compared to their earlier bonds of 0.5%. This move indicates a sense of urgency as NIO really needs the capital. Second, there's the concern over NIO's sales prospects. In recent times, NIO's sales have weakened due to the increased competition in the market. Other reasons include model upgrades and overlapping product lines. Lower sales obviously resulted in reduced gross profit, all while marketing and R&D expenses continue to grow. With dwindling cash flow, NIO's financial situation appears to be pretty bleak for the time being. As of June 30th, 2023, their cash reserves have been decreasing rapidly. Clearly, they're facing the challenge of securing more cash while also dealing with all of these losses. However, it's important to note that NIO isn't simply just throwing money around blindly without a plan. To address investor concerns and justify their heavy investments, NIO showcased their full stack technology layout at the Technology Day event. The comprehensive technology package spans 12 core capabilities and underscores the value of NIO's R&D expense. One significant reveal during the event was NIO's first self-developed chip, Yang a LiDAR main control chip. NIO expects this chip to not only boost performance but also drive gross profit growth, which they expect to cover the R&D expenses in a year. But back to our question, why is NIO investing so heavily in a challenging situation? According to Lee Bin, there's two key reasons here. First, NIO is clear about its business boundaries and resource limits, focusing on R&D, infrastructure, and user services, while avoiding ventures unrelated to smart electric vehicles. Second, Lee Bin and his team have unwavering confidence in NIO's ability to navigate this cumbersome situation, even after experiencing the near existential crisis of 2019, where the company almost went bankrupt. NIO's approach isn't without justification. Reducing investment intensity could harm the company's long-term success. Furthermore, some of NIO's sub-businesses, like its network of charging piles, have already become profitable, providing stable cash flow for the electric vehicle maker. In conclusion, NIO's recent stock price plunge has raised eyebrows, but the Innovation and Technology Day showcased that the company is confident in the decisions that it's making and its outlook for the future. They're also confident in the company's ability to manage risk. For NIO, it's about understanding their boundaries, confidently treading the line between investment and loss, and believing in their upward trajectory despite the challenges and the naysayers. That's it for this episode of the Courtside Financial Podcast. I want to know what you guys think about NIO's recent moves. I know that the sentiment out on the street is not very positive right now, but I definitely want to hear from you guys here on this channel watching this video, what you think, how you think NIO should be moving forward in the future. So make sure you hit the like button, subscribe button, notification bell icon, leave a comment down below. And yeah, that's going to be it for this one. Catch you guys in the next one.